One of the most important things an investor can do is to build a filter system, a very good, thick HEPA, NASA level filter system to filter out the noise and the confusion and the contradiction and the confliction and all of that. Because look, this is our money, and money is already highly charged enough. This is our retirement. This is our safety. This is our security. This is our certainty. So we are already more biased to not wanting to do the wrong thing, which makes us often do the wrong thing. So on the screen here, you see a price chart of the S&P 500 ETF IVV, which includes dividends. And I want to talk about what's going on because it matters. Hey everybody, this is RC Peck, and I want to do a video this week. It allows me to get my thoughts out quicker without having to put hours into making sure that the words on the quote-unquote paper are clear. So we have a price chart of the S&P 500 with dividends reinvested via the ETF IVV. And I want to point out a couple things because one day the market's crashing, one day the market's going up, the next day it's crashing, the next day it's going up, the next day it's crashing, the next day it's going up. So if you look at the screen, I just put a box up there. Actually, it's a rectangle. Let me make I want to make these easier to see. So let's make them thick and let's make it blue. So within that blue box, that's a price. If the price is in that blue box, then we have to be in the choppy, middling, messiness, sidewaysness of the market, right? It's not going up and it's not going down. It is going sideways. Now, I will tell you that the stock market does not like going sideways. It likes to trend higher and it likes to trend lower. It is designed to trend. And so the fact that it hasn't been trending for, let's call it 13 months, tells you that it is really, really, really getting on its tippy toes, looking into the future, 6 months, 12 months, looking, going, what should we do? Should we move higher or should we move lower? Or should I just move lower a little bit? And then once I've moved to lower a little bit, then all is fine. And so right now we're in that messy middle. We're in that blue rectangle. And until that changes, nothing's going to change. You can see it broke down below here. From the top of September to the bottom of December, it was a little over 90 days, about 95, 93 days. Not 93 trading days, but 93 calendar days. The market almost fell 20%. But that 20% fall was very much defended, which the bottom of that is December 24th. So we know that this market absolutely defended the negative 20% mark. And as soon as it fell 20%, it regained half of its fall, meaning it fell 20%-ish and regained about 10.5%. So it regained half of it. As long as the price stays within the blue rectangle, it is that messy middle. When it breaks below, then the market is definitely getting more bearish, okay? And when it breaks above, it's definitely getting more bullish. So above it is more bullish or bullish, below it is bearish, and everything in between is really filtering through the information that's coming to it. Now, there's other things, of course, that I look at. I look at the play between stocks and bonds, the strength of bonds by themselves, the strength of bonds relative to stocks. Same thing for cash, right? The strength of cash in absolute terms and the strength of cash in relative terms to the stock market. So we are definitely getting signals that people are still buying bonds. People are still buying cash. That has not gone away. That's generally a sign that people are more concerned about the future. Now, this correction started officially on September 21st. Since September 21st, okay, gold is actually up the highest. Gold, the metal's up the highest, followed by 7 to 10-year U.S. Treasuries, followed by utilities, followed by the real estate sector of the stock market, and then followed by healthcare. So the fact that something as defensive as gold is still at the top and is holding out, has not corrected down, and right behind it is US government bonds, tells us that people are still concerned. And we're going to have to see not only this price go higher on the S&P 500, but we're also going to have to see the price of bonds fall, the price of dollars fall, and the price of gold fall. We're going to need to see all four of those happen to really start to get more bullish about it. And as you know, guys, I came out with a signal. Those that buy my research, we came out with a signal and very clear on what to do and how to position. We are definitely positioned to be okay with whatever happens. And I really want you guys to think about with your own investments that you want to have an approach where you're going to be okay regardless. If we stay in a messy middle for another year, you'll be okay. If the market breaks down and gets more bearish and accelerates to the downside, it breaks below that December 24th low, you're going to be okay, right? Because you have an approach that is having you step out of the stock market and step into the more secure asset class, or just the opposite. Step out of those non-stock asset classes and step back into the stock market. It's about knowing what to do before you have to do it. So we're absolutely in the messy middle. There's not much to do now. My suggestion is you do not put on. Any of you listening who are traders, i.e. all the men, or most of the men, want to figure out how to trade this, my recommendation is you do not trade a market that is deciding whether it should go higher or lower. Right now, it's to just protect, be calm, meditate, digest the information, and wait for clear signals. But again, you have to have a strong filter. And that's probably my biggest push against the Pick of the Month newsletter industry, because they throw so much at you, so much confusion, so much overwhelm, so many ticker symbols, so many conflicting ideas, that it literally shuts the brain down, and that does not help your security, your safety, your certainty, your stability. All right, guys, until next time, which will be next week, thank you so much for being in my world. And this is RC Peck. All right, take care.